Today is Thursday, February the 27th, and we had another really bad day. This is following the president's incoherent press conference yesterday. I guess it didn't give the market any good feelings at all. Look at the volume. We haven't seen volume, twice the normal volume in the Dow, NASDAQ, and the S&P. Advancers were behind decliners by 9 to 1. On the New York Stock Exchange, what did we see? We saw advancers of 300, decliners of 2,700. Same thing, 9 to 1. That takes our market breadth down even further. So I did spend the $40, and I did take a look at the oscillator data in the past. So, here's going back to 1960, but I wanted to look at 3 periods in particular. I wanted to look at this drop in the market from 2007 to 2009. There was the drop that happened just after Obama got in, about June of 2009. And then we had this drop in 2018, and now we've got this one here that we're in the midst of right now. Let's compare this, where we are now, to this 2-year drop from October 2007 to June 2009. So not quite 2 years. Let's just look at this, and let's zoom in on this. That's what this looks like. So while the Dow, this is the Dow here, while the Dow was pretty much making lower lows, lower highs rather, and then started to move up in March of 2009, we saw the McClellan oscillator get below 200 here, 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 and here. So 1, 2, 3, 4, 5, 6 times in the full descent. And we had all these wild gyrations of money moving in and out, but the bounces of money moving in were constantly met by selling, because you've just got a straight line here where they're really, the market's not going up and down, the market's going steadily down, but the McClellan oscillator is bouncing all over the place. How long can it stay at these kind of levels? Because right now, if we look at 2020, we're down around almost minus 400. And we've had 1, 2, 3 days around or below minus 300. How many times did that happen back here? Well, we were below 200 here from March the 8th through to March the 18th. So 2 weeks. This is a span of 2 weeks where we were always in the oversold area, significantly oversold. And here we went from June the 8th to July the 8th, 30 days, 1 month of really bad oscillator numbers. But here is the worst. From September 8th of 17th of September 2008, all the way through to 27th of October. That's about 5 weeks. And this period in here was the 18th of February to the 10th of March. So 3 weeks. What we're seeing here has only been, and that's the last one here, which was June the 16th to June the 24th. That we were picking up there. So this was the critical drop right in here. So they all last between 3 and 5 weeks. We're really only on our first week. We could be in this period of McClellan oscillator, terribly negative numbers, for 3 weeks or more if the market continues to drop. And you can see we had a drop from 14,000 in the Dow all the way down to just over 6,000. You got to wonder if we're heading there now. Let's take a look at the SPX on the Ichimoku. This is the weekly chart. We're below the 200-day moving average, and we're coming to look for support on the weekly chart at 2,900. On the daily chart, we've dropped below both 200s, the EMA and the SMA. Chiku span as well. So we've now got to look at a new time frame, and we've got to say that we think the market has got to be probably going down to test 2,900. Apple had probably its worst day in history. Still got room to go on the cloud, on the weekly. On the daily, we tested the top of the cloud today and we got rejection. We are going down for the Chiku span to touch the cloud. So it's certainly not a time to buy Apple right now. There may be a bounce tomorrow, there may not be, but we will be in this messy phase of the McClellan oscillator for the next 3 weeks, quite possibly, if we're repeating 2007, 2008, 2009. AT&T, good thing we sold all of that. That's going to be a great opportunity below 36. Whirlpool, pretty negative. This is a consumer staple. Caterpillar, 126, going in to fill this gap, which comes back to October of 2019. So we're coming back to fill that gap. Look for us to fill that gap tomorrow. But we've lost the 200-day moving average a long time ago. And on the weekly, we've lost the cloud. We still have an opportunity to bounce on the weekly here with the Chiku span. We could be bouncing at around 120. So look for a filling of the gap. In other words, this is not time to buy any stocks. It's also not time to sell. I did some selling today, but I did it in preferred shares of a real estate investment trust, because even those are getting hit and they are paying 6 to 7% dividend. But I sold at $26.15. It's got a preferred price of $25. So I made $1.15 per share there. So I was profit I wanted to hold on to. It was enough profit to account for 2 cycles of dividends. So I want to get back into AG&C preferred real estate investment trust shares. But I want to wait till it gets, it does its maximum suffering. And I don't mind missing one dividend cycle because the profits on the preferred shares cover 2 dividend cycles. So bottom line is we're looking for the SPX to test 2,900. And we think that the McClellan oscillator can spend an awful lot of time below 200, as it has, if it's going to repeat 2009, it can happen once, but once we're out of it, it doesn't mean everything is good. The market still went down. We got out of this mess, popped up, money moved into the market, but not enough to make a significant change in the market, and then the bulls came in and creamed everybody again. Look at all this time here below 200. Money came into the market, but it did very little for the market and got creamed again. Now, if we take a look at trend lines, remember, we looked at bullish, bearish control of the McClellan oscillator, high, lower 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 high. The area that we're really, this was when we were on our way up, and then finally the bears took control, the bulls took control, we went up. But here we had high, lower high, lower high, lower high, and the market was going down. This is what we saw in the McClellan oscillator here. Remember that trend line that we drew here, showing us that the bears were in control? This is not record setting. It's record setting for the period that's being shown on this chart, but we know that these minus 400 values are not strangers. They've happened, actually it's only happened one time before, and that was October of 2008. So we could very well be in for a short-term bounce like we saw in October of 2008, only for the market to get driven down. So don't get fooled by the McClellan oscillator. Okay, we've got to look at the chart, and we've got to look for a reversal in the trends on the charts.